Welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's June 27th, and here in this XC studio is JJ and maybe Benjamin of J Labs. We will see. I'm your host, Marconi White. Today I'm asking, how do we trade the ETH ETF? But first, it's rapid fire, where I look for simple answers to complex questions. Let's get this started. JJ, you're in the hot seat for all 5 or maybe 6 of these questions. Are you ready?
Uh-oh, here we go.
You look a little nervous, but hang in there, buddy. Hang in there. All right. Rumors are swirling that the ETH ETF might go live as soon as July 4th. I think the latest I saw was July 2nd. Is it bring it on or slow it down?
You know what I'm going to say, and it's going to depend on the move Dixie makes here into the monthly close. So if we see Dixie fall below preferably 105.20, even lower than that, even better. And I think we have some room for a nice rally here. If Dixie moves back above 106, it's just going to be a non-event, sadly.
In the words, path dependent. All right.
Always.
We got the next one. CIO at Bitwise Invest, Matt Hogan, hopefully I'm saying that correctly, estimates that ETH inflows will mirror market cap levels and be roughly $15 billion in the first 18 months. JJ, is this too high or too low?
Seems about right, given the current circumstances. I think, if we just have a choppy Dixie, there's not really any definitive trend there. The market's not breaking down. 60K BTC holds, 3,200 on ETH continues to hold or so. I think it'll probably be, muted somewhere around there. But again, if Dixie ends up going down lower and we see some momentum in the market, I think it would wildly outpace that. So I think that's kind of our floor.
The base case?
Yep. Good base case. But
all right. I think there was a lot of debates on how he got to that number, but
I think he just made it up, right? Nobody knows.
We have that meme somewhere, right?
Yep.
All right. Every asset needs a theme. What's best for ETH? World's computer, ultrasound money, or the internet's app store? Rapid fire. What comes to your gut?
Internet's app store. I think people can buy into that.
All right. So ETH is coming for Apple.
Yeah, there you
go. I'd be fine with that at this point.
Whatever pumps our bags. So spend some time on.
We're not greedy. Liquidity Armageddon or election 2024. Which is the bigger trade?
Why does it have to be one or the other? We might get both, right? Could possibly see a liquidity Armageddon in the summer, followed by a nice election rally. And I think preferably you don't want both, but there's opportunities in both, right? So who's to say it has to be one or the other?
Okay, well, that's just super greedy. I love it. All right, we got the last one here. The U.S. government is reportedly selling $241 million in Bitcoin. Is this a bottom indicator?
I think it has been historically. I didn't check the numbers fully, but if I remember correctly, basically every time they sell, there's a whole lot of panic. Those coins end up moving OTC. They're bought, they're not selling it on the open market, just slamming the sell button on Coinbase. So typically, I believe it has historically marked bottoms or close to local bottoms. So let's pray. Let's pray that's the case now, because if we go back below 60K, I don't think it's going to be too good.
Yeah, that's going to be scary. Actually, I lied. We do have one more. Professor Satoshi, who was a premier guest on yesterday's options roundtable, believes we're at most 3 weeks away from the Dixie topping. Yay or nay?
Nuke it, Satoshi. I'm not as don't have as much conviction as him. I just see a bunch of higher lows right now, but I'm praying that he's right and the bottom falls out here on Dixie.
Okay. All right. Well, Professor Satoshi, we'd love to have you on here to describe your Dixie take. We didn't get the chance to do that yesterday. For all those who did join us for the options roundtable, I hope you enjoyed it as much as we did putting it on. There's some really great alpha, a lot of different perspectives from the 4 guests who join us. And of course, JJ dropping in with some great questions. If you want to see that, you can go to the Exchanging Good Twitter handle, X handle. The broadcast is there. You can replay it. And we're looking forward to having more of those events, more roundtables, more options tables, but definitely just a lot of fun. We also will put out a survey. If you were able to join, you have some thoughts on what we could do differently, what we could do better. We'd love to hear from that. We'll be definitely listing that. So take just a couple of minutes and fill that out. But with that, we're going to get into the show. JJ, it's all about ETH right now. I'm looking at the charts here, and ETH is sitting at about 34.41. It's up about 2% on the day. And obviously, with ETF news, there's going to be a lot of chapters. It's a sell a news event. Buy the rumor, sell the news event. We also have people talking about the inflows, as we just had from Bitwise Invest. Then we have the discussion of this being a terrible time to be launching because of the fact that the market seems very muted, very sluggish. We're right here in summer. We've got a strong Dixie. What is ETH looking like right now? What are traders looking at right now as a potential opportunity, or waiting to see what happens, assuming this ETF goes live next week?
So right now we're seeing some relief bounce here on the daily. We take a look at it. It obviously got pretty ugly after the large move up that we saw in May, early June, kind of stagnated right below resistance at 4,000. And then we see it fade back, and it's kind of in the mid-range, right? We're not trading at the May lows, but we're also nowhere near the highs. We lost a lot of momentum. We've had this whole flip on the daily here. We've lost the 50-day moving average, the 100-day moving average. So what you would really want to see for signs of continued momentum is obviously turning these lost resistance lines back into support. We get back up above here, start to form another trend channel where you kind of flip all of these indicators that turn bearish into bullish. And that would also coincide with the 50 RSI mark being retaken. You'd like to see some increasing volumes here. And if we can start to stabilize between, say, 3,500 and 3,700, I think that's really going to be building the base, and that would kind of be the market telling you what's going to be coming ahead as the ETF comes in. That's actually going to be a bullish event. But so long as it's down here, it's really hard to be bullish on it, right? Like, for whatever reason, that's why we use technical analysis. It helps you manage risk, and you typically will not see massive reversal candle come up out of nowhere while it's consolidating below these lows. Like, even if we look at May, we saw it got a nice leg up here, and then it kind of consolidated before that massive move up, right? Mm-hmm. So you'd want to see something similar to that once again and see it really charge the upside. If we look at implied volatility levels on ETH, they've been much higher than Bitcoin's, which is some signs of the market preparing for that up move if it is to happen. There's been a lot of call buying in recent weeks, and you see that really clearly reflected here in the Bitcoin, the EVIV index. If you compare it to Bitcoin's, it's about 15 to 20% higher. Bitcoin's only trading at a BVIV score of around 49 to 50, and ETH is trading around 62. So there's kind of going to be one of two things I think that happen in the coming weeks, is that either I think Bitcoin and ETH will both jump up together. You would see both these IVs rise in tandem as ultimately the upside does manifest itself, or it's going to take more consolidation, and that's going to lead to ETH, like people who opened up a lot of calls trying to front run the ETF news. If it ends up not being as immediately bullish as the market expects, you're going to see those IV levels kind of plummet and reach back to where Bitcoin is, or somewhere in the 50s. So it's just keeping an eye on that. If we look at some of the option flows currently on ETH, last week we saw a lot of September 4,000 calls bought. We were pointing those out. And today it seems like that's kind of flipped slightly, or at least there's been one large order of this where somebody bought 6,000 July 26, 3,600 ETH calls, and they sold the September 4,000. So this is a call spread, and they'll make money if that upside move is manifested in the coming weeks, as opposed to the end of quarter three. So it seemed like a week ago, people were really shooting for September to be that big breakout in volatility. And now that we've seen the front end of ETH's IV curve kind of drop down, and this was something we were alluding to back in May after the big spike up, is that when IV became so overextended back then, I think we were at like 120 levels immediately after the ETF news launched. And then the back end obviously spiked up as well. And we were saying one of two things is going to happen as we get into summer. First, there's going to obviously be an IV crush on the front end. Like, implied volatility levels over 100 just aren't sustainable. There's too much supply, people willing to sell immediate upside and collect that yield when things spike the way they did in May. But then as we get into the summer months, either one of two things are going to happen, and that price is going to stagnate, and you'd see these back end IVs fall, like March, December, September. They would fall down to, say, 50 to 60 range. As we see now, September still at 65 despite the lack of volatility recently, December at 69, and March at 72. So these haven't really collapsed, but the summer months have fallen off drastically. Like these July and August expiries, they were up well above 70 back in May after the big spike. So now they've collapsed down, and it seems like the market's finding an opportunity here to get long volatility on these dates, given the ETF is just a few days away potentially, and they see kind of this potential for a spring back and maybe another rally to 4K in the coming weeks. So it seems like a good risk reward opportunity for those July and August calls, given how beat down that the front end of the IV curve has become. and they're kind of expecting a bump up in the coming weeks, or at least positioning for it.
So it sounds like a bit of a mixed bag here. We're saying that the technicals don't look great. The options market, though, appears to be positioning for some for a catalyst to move up.
Yeah, that's typical of what you see in the options market. Is they're always trying to front run moves, right? Like if you waited until ETH was at 4K, the amount you would be paying for those calls would be through the roof.
Absolutely.
The amount of premium, right? So if you're an options player, you kind of have to be playing 3D chess a little bit and anticipating the moves before the technicals do flip bullish. So this is ultimately what you would want to see. Might be some people with inside information, some kind of sophisticated players getting into positions there and trying to front run the move. Whether or not it's followed through on, I think that depends largely on what happens with Dixie in the coming weeks.
Walk me through what you think may happen from a trader's perspective and an institutional perspective, because Q1 and Q2 were really a story about the carry trade for Bitcoin and just being, it appears to be very lucrative. We were talking about that at the time and compared to continue forward. Do you see something like that continuing with ETH in isolation? Could that be a massive catalyst for it or not?
Yeah, I mean, if everything's as bullish as anticipated, or maybe not as bullish as we think it is personally, right? Like our
Mhm.
views on ETH and its ability to multiply. If say we do get that summer rally, DXY falls below 105, starts to really trend bearish. We see some relief in Bitcoin, maybe gets back above 67K or so, and you really see ETH start to take off once this ETF goes live. And as we were saying again, like the IV curve would once again jump, and that would create lucrative opportunities for cash and carry trade. You'd see also high perpetual futures funding. So there would be a whole lot of ways that institutions and whatnot could jump in on this trade, which would ultimately lead to spot buying volume. So they would be buying through these ETFs and then selling through another mechanism, be that shorting the futures, selling calls against it. And it's all dependent on some kind of upside volatility being realized to bring in that kind of FOMO demand and speculators. And that's what really drives the cost of those options and the perpetual futures up, which creates an opportunity for institutions to carry trade. And
Okay.
that's really what it's relying on, is because the spot buying volume will come from institutions, right? Like every retail person who's
Yeah.
interested in ETH is largely already allocated. So I don't think we're going to see any massive um, flows from crypto natives into ETH. It's dependent on that outside money coming in. So
Sure.
we would need to see them start buying up spot. And as they buy up spot, obviously that's going to have a good impact on price, which is going to drive price up, which increases speculation. Speculation increases funding rates and the IV curve. So as those things jump up, that creates the opportunity for them to jump in on the cash and carry trade. And that can snowball, right? As we saw with Bitcoin in March.
Yeah.
As that goes higher, more people want to get on it, so they buy spot, and it just becomes a snowball effect until it reaches climax. So
Okay.
yeah, I think there is a good potential for that.
If you're curious about some of the language and some of what JJ just went through from an options perspective, definitely check out the recap, the whole episode of the options table from roundtable from yesterday. It was a great event happening in our XE studio, also streamed live here to X, and just a lot of really good information about how to think about options, some of the terms that he's using today, talking about the term structure and how that's going to change, what we can expect as we move forward. Benjamin, are you with us? Oh, that's all right. We'll deduct that from the salary payments. So we're just going over the ETH ETF. It's coming out next week. At least it appears to be. I want to get your perspective. JJ just walked us through. The technicals do not look fantastic. They continue to be kind of in the cellar, but the options market appears to be kind of positioning for a little bit of upside action. What's your take on what this is going to look like in the first week and going into? What does the data tell you about what this ETH ETF means to the market? Okay. All right. Well, we'll have to come back to the producer telling me that we may be having an issue, an audio issue. So I don't want to, I don't want you to go too far into the analysis. If we're not going to be able to put that out live, we'll come back to that, Benjamin. JJ, I want to come back to you. You just laid out the case for BTC, for ETH. Let's get into BTC. I was looking at some of the numbers this morning. It's up about 0.72, sitting at about 61,000 last I checked this morning. Interestingly, the ETF flows were actually positive the last 2 days. They were low. I think it was 31 million and then 21.4 million coming in. So not a massive amount of inflow, but also definitely not negative. And then I'm sort of seeing the stabilization. What is this telling us right now? You know, we talked about sell in May and go away. We've talked about the fact that the market just itself looks fairly weak. Is this just going to be a continuation for some period of time? Or, you know, is this a sign that we've perhaps bottomed and we're going to start building up for what could be a massive Q3?
Remains to be seen, but things are looking pretty, like this is kind of the best case scenario we outlined on Tuesday, right? Is that Bitcoin would find at least a temporary bottom there around 60K and start to trend between 62 and 64 or 61, 64. So it seems like we found that bottom, at least for now, you know, fingers crossed. We see, you know, Dixie pulling back slightly. It's not by any means in a downtrend, but these are the early signs of what you'd want to see: some price stabilization, finding a floor, hopefully see it go up a little bit higher in the coming days, and just continue to build this base. It's not going to be, I still don't think we're going to be in for an overnight V-shaped recovery. If we do by chance get that, I'd be thrilled, but I just don't see it from this technical perspective. You see all these lost support lines. These are going to take a while to reclaim and flip everything back to bullish, right? Anytime you have that kind of outsized sell-off that we've experienced in the past 2 weeks, it takes time. The market has to redigest it. You have to come up. As we said, there's a lot of people with underwater longs at these levels. So anytime price gets there, you're going to face selling pressure from people who are just happy to get out at break even or slightly below break even. So it's going to take a little bit of time to digest, I believe. But what you'd want to see is ultimately, this kind of stabilization here. We have a large options expiry tonight, and I think that might pave the way for some move one way or the other. Once this positioning rolls off, you see there's a lot of put open interest at 60K. So what happens once this position's closed? Does that create the ability for price to fall through that floor? Like right now, this is working as support because of this massive amount of open interest. Once that's gone, you know, that's quite a substantial amount of notional, over 215 million notional value in these puts. So the market makers weren't going to lose on that bet. It seems that
No,
way,
they
right?
aren't.
So they're going to let those expire worthless, and then we'll see obviously what tomorrow holds and see if this floor continues to hold. If this 61K levels continues to hold tomorrow into the monthly close, we see a bit of a bump up into the monthly close and just more stabilization in between 64 and 61. I think those are very good, encouraging signs that the worst could be over. But again, there's a lot riding on these next few days to see how ultimately how Bitcoin closes the month, and also Dixie as well, to see what we're looking at as we head in July.
So I want to just kind of recap here, because we've talked about this several times. Obviously on the show, we're covering it twice a week, kind of where's the market going? What are we expecting to see? It feels as though we're potentially, as you're saying, if we see some confluence, if we see some confirmation, we might actually be sitting here at a local bottom, right? And yet we know that Bitcoin doesn't like to stay in a range for too long.
And
we know that
recently,
right.
recently,
And yeah, exactly. It's become a little bit more of a stable coin. So what is your take that it can kind of survive in kind of a tight range of 56 to 70 all the way into Q4 or Q3 for that matter?
I really don't see it. Not to say it's impossible, it can't happen, but as we pointed out, you know, realized volatility levels are as low as they've ever been. We're looking at December 22 lows essentially here on the BVOL chart. Let me zoom out. So we're basically where we were after FTX collapsed, not far from it. You know, we were looking at a BVOL score of 9. Now it's at 14. And it's been 3.5 months now or whatever it's been of just, you know, trending, just staying in range, not breaking above 70K for too long and not falling below 60K for too long. And I think the liquidity in this range is almost tapped, right? One way or the other, we're going to run out of buyers or sellers in this range soon, and I think we will see an expansion by the end of Q3. Most likely by the end of the summer, we're either going to see a definitive breakdown or breakout, just because it's so hard for price to stay stagnant for this long, especially something like Bitcoin that's traditionally very volatile.
Mhm.
And again, looking at the Dixie, if Dixie is to break out above 106, start to trend towards the yearly highs above 106 into 107, where we're looking back at 2023 highs, I think in that scenario, we're well below 60K. We're probably even trending towards 40K, right? Just because of the liquidity strains that's going to put on the market. People will not be speculating as much as they were in the first half of this year if Dixie's running that hot. Conversely, if Dixie breaks down, loses all these support lines below 104, and really starts to enter into a bear market on these higher time frames, then I think that's going to be the juice we need to ultimately make a break above all-time highs. But either way, I see it that the coiling of Bitcoin and the coiling of DXY, that the confluence between those two things, it's kind of signaling to me that we're due for a decisive move sometime this summer, be that July or August. But I really don't see it lasting all the way through September of just this low volatility chop. Could be wrong. And again, if I am wrong, that presents the opportunity we discussed Tuesday, where that's just going to suck out all of that call premium for the end of the year calls, and you can get some really good risk reward plays as we head into the election season. But I feel like the time is ticking, and it's going to make its move within the next month or two.
Yeah. And on yesterday's options roundtable, we were talking about some near-term plays people could be looking at. Looking at some covered puts or cash secured puts and some covered calls if this continues to stay in range. What is your perspective on that? Because I think you've traditionally been a little bit more conservative, not necessarily being really excited about those plays. But if we continue to see a little bit of this muted volatility, the fact that we're staying in range, do those options become a little bit more attractive to you?
I don't love it. Even if we do get that choppy scenario where if Bitcoin stays in range for the remainder of the year, I would be happy to miss out on extracting some volatility from the market at these levels, because it's at all-time lows, right? So same way you don't want to buy coins when they're at all-time highs, you don't want to sell them when they're at all-time lows. It's the same thing for volatility. So if we're realizing all-time lows in volatility, I don't want to be a volatility seller. Just full stop, right? Because your downside, when that eventually breaks, it's that beach ball underwater effect where volatility goes from very boring to extremely exciting overnight. And if you're short volatility, you're on the losing side of that. When if we look at the BVIV index, right, like some of the wild moves that things able to manifest off bottoms, they happen very rapidly. So if we look at, say, October 2023, this massive move up, like you have a very boring market. It's just trending for long periods of time. People think it's not going anywhere. I'm just going to sell volatility. Boom. Within a few days, your losses would just be tremendous on this, right? Same thing in January, finally finds a bottom. Here's an example of it to the downside. Last August, we were in an extremely boring market. Bitcoin was just kind of chopping around 28 to 30K, and then boom, the bottom fell out. So if you were selling puts, you would have been massively blown out by this move. I think there was something like 40 bankruptcies on Deribit at this time due to people selling puts because they thought they could just extract free money from the market. So the time to sell volatility is when it's very high, like these levels, when you start to see it trend up higher and then lose some momentum, start fading, but it's still near the highs. This is when selling volatility is lucrative and enticing. When it's trending towards the lows and kind of trying to form a base, I just don't see the upside there. So I kind of see taking no position in volatility as a short volatility position because I want to buy it lower. So rather than outright shorting it and running that risk of ruin, I'll just wait for the levels to come to me and then find a level that I want to buy them at. Personally, that's the way I'm viewing it.
Well, and I do want to wrap up today, as we always do, with some opportunities looking specifically into Bitcoin and obviously with Ethereum coming out next week, seeing if there's some really, recapping some of the plays to be able to play those and to see if it's something that would align to sort of your risk profile, but also be a really good, interesting setup. Before we do that, I do want to get a little bit more into the Dixie. I'd like to bring Benjamin up here again, but it looks like we're still having some issues from a production side, so we'll just continue on. Oh, is he here? Benjamin, are you live? Do we have your audio?
I'm still here.
You're still here?
Yeah.
Producers, hopefully you can let us know. Hopefully this is now going out live. Okay, so I guess to bring us back here, we've got a little bit of a whirlwind today. So we've got the ETH ETF coming out next week. I think the technicals have looked bad. You've kind of commented on the fact that it's a bit of a you're looking for a reversion back. If we see a little bit of an impulse higher, you're expected to come back. Not a lot in the market to get excited about right now. I want to bring up something that we were talking about offline. Again, going into the whole ETF narrative. We had this conversation that came in, and I'm trying to bring up the tweet right now from, if I can pull this up, from Matt Hogan. And I mentioned him, the CEO of Bitwise. He was mentioned at the beginning of the broadcast talking about the fact that he was giving some estimates for what he expected from ETH ETF inflows. I believe it was about 15 billion over an 18-month period. Interestingly, he had this comment. He said the carry trade is not reliably profitable in the ETH for non-staked assets. So I do not expect the same carry trade flow for the new ETH ETFs. Removing carry trade assets from our model cuts our flow estimates from 18 billion to 15 billion. And we were going back and forth trying to interpret what exactly does that mean. What is your take on that? Is that an actual issue for that carry trade? Because, you know, as JJ was saying, there's a possibility if we get an impulse higher that could make that carry trade a little richer. Matt seems to suggest that's not the case. What's your interpretation there?
No, I don't get why carry trade and staking has any relationship over here, because a cash and carry trade is basically spot long and short futures. So that depends whether it is BTC or ETH. It depends on demand and also how speculative the asset is right now. If volatility has dumped down and if there is not much of demand coming in, if there is weakness, then obviously, you know, the potential to make on the carry comes down. So irrespective of whether it is BTC or ETH, you're still having unreliable situation irrespectively. Even if tomorrow Solana comes in, it would be the same problem. So I don't see a reason why staking has anything to do with this. But certainly there is a bit of wall of worry when it comes to whether, you know, the cash and carry model can continue given funding rates have been quite muted, and it's not going as high as it was expected. We're not seeing a lot of FOMO as it was expected. But yeah, and the thing is, it's quite now intriguing to me to see that they are applying for the Sol ETF. So they're trying to keep the casino going. And the thing is, for Sol, we don't have the CME futures yet, or not that at least I know. So now that is interesting. Now, are they going to go and apply for Solana CME listing? First, get that back up and running, because how else you will do the cash and carry trade for Solana if ETF gets approved? So,
But Benjamin, if you can you explain the importance of why that the CME futures trading, what it means, what it has meant for BTC and for Ethereum, and what not having it might mean for a Solana ETF?
well, basically, see, the basic understanding when it comes to Wall Street is how they trade is that they'll buy up an asset, but they need a hedge for it. They cannot sleep if there is no hedge for an asset that they have bought. They may love real estate, but they need a hedge for it. They need a protection. They need an insurance. They'd love to take a cut on the potential profits rather than, you know, like sleep bare naked or directionally. Okay, this is one
Yes.
thing. The second
Yep.
thing is, you know, they all want low risk free money. So how do you get low risk free money? Is to have an instrument which says, hey, I'm bullish on it. Another instrument which says, hey, I'm bearish on it. Just like how you go and, you know, take a straddles position and you basically try to make money on a volatility. But even there you have a higher risk, because if volatility is low for a while until your expiry, then your contracts basically expire worthless. But delta neutral is, you know, the cash and carry model. It's a free money model,
Yeah.
which is why Wall Street loves it. You know, like there are so many credit line and banking agencies who will lend you money if you are doing delta neutral and not directional.
Well, yeah.
So if you're willing to buy spot and just short futures somewhere, And if you are able to make money on that premium constantly, that's huge money. But this works only in a bull market, right?
Sure.
But for
Well,
it to
and
work, you need an instrument on the other side.
Right, and I guess I wanted to point out, and I should have been a little clear on the question. I think from a procedural perspective, the SEC was looking at sort of where did the price information come from. This is my understanding of some of the debates that were going on behind closed doors. So they looked at some of the pricing coming in from the CME, the fact that you didn't have massive divergence across the CME and other markets to say that the manipulation was relatively muted. So there was some reliance on those price signals coming in from the CME, both for Bitcoin as well as for Ethereum. And so if you don't have that for Solana, it sounds like there may be a procedural issue that the SEC can point to actually say, no, we're not actually going to allow this to move forward because we're not confident in the pricing of it beyond what you just described, which is really, does Wall Street feel confident that they can actually take a product that they can't hedge?
You make a very valid point. Pricing is definitely going to be an issue, especially because you don't have a futures instrument that has established itself earlier, shown demand that there is a requirement for such an instrument. So both of it goes hand in hand, and I don't think this will get approved faster, but it only shows that Wall Street has decided to bring in as many assets as possible. So the speculations we've had over the past couple of months about, okay, the next one is going to be ETH, next one is going to be Solana, then Dodge, then Pepe, and all of those type of conversations, it's not going to be far-fetched. And Vanek already has a meme coin index, so there's no reason why they wouldn't bring out a meme coin index ETF or something like that to compensate for a potential. Yeah, there's so much money to be made. But the biggest problem is this has to also reflect together with retail demand. If retail demand doesn't come in to compensate this in times of sideways, or like, they need to come and pick it up. The demand will not come only out of Wall Street. So right now,
that's what we saw with the Bitcoin ETF
yeah.
earlier in the year. Like, they ran it up. So like, you need to create FOMO in order to get speculators on board and willing to pay the premium that they need to fund the cash and carry trade.
Yeah,
like, it doesn't work unless there's some kind of chasing going on in the market.
That is what is missing when it comes to ETH right now.
Sorry, can you just walk through that one more time? You saying that's what's missing? Can you be a little bit more specific on what you mean by that?
That FOMO is missing. The FOMO is missing when it comes to ETH ETF. So we already know from last month, end of last month, that there's going to be an approval, right? So we had a huge candle, and which we have walked back completely down. In this 1 month, it has still been more of a distributive behavior when it comes to ETH rather than more of an accumulative behavior. We saw some call option buyers and a little bit of overcrowding there. We saw a bit of overcrowding in ETH future CME on the open interest side. I think it was at all-time high or something like that. But we're not seeing that similar spot demand happen, is what I feel, at least. I would have expected that we would have kept front running right now on ETH spot with a very good Coinbase premium, like all the way up to 4,500 or 5K, even if BTC was lacking and, trading at around 69K. But I think the forces are much different. The market forces are much different right now. There is a lot of wall of worry when it comes to dollar index, and that is also flooding down to other assets. So I wouldn't blame ETH alone for not performing, but the environment is not conducive enough for it to run that strong. So I still believe that July is
I want to play out a bear case scenario and then move on to outside forces. But you have so many that are sitting there in the Ethereum camp, and you could call it the altcoin camp. I've seen just so much discussion on X about this competition right now that's happening between the Ethereum people that believe in the long-term vision for that ecosystem and those who are perhaps more focused on Solana, talking about the performance of that. And obviously the price action for Solana has been extremely strong because of the meme coin narrative, which has really been here for, at this point, I want to say 8 to 9 months, it feels like. But when I look at those two sort of camps and I kind of see them, I feel like they're still tethered in a way that they don't want to mention. What happens if the Ethereum ETF underperforms for the next 6 months? Does this have a knock-on effect to these other ecosystems, or are they actually separated at this point because it is so crypto native and that Solana is being driven by retail activity that doesn't go and doesn't grow because of ETFs? Anyone's welcome to. I guess, Benjamin, that was a question for you if you have a perspective there.
Oh, I thought it was.
Do we lose him?
JJ still.
Oh no, he's still here. Yeah.
No,
So let me just rephrase that. If you have this underperformance of the ETF, again, the timing is not great from an ETF perspective, and let's say that is not as strong. Does that have spillover effects to bringing down the rest of the altcoin market?
Yes, certainly, because if ETH is not going to perform, there's not going to be an overflow into other assets. So one of the two has to happen. Either you need to see the beta run first, and that overflows to ETH at the end, or you need to see ETH run first and the beta to run later. The problem is we're not seeing either happen in a strong manner yet.
Mm-hmm.
So that's what I'm saying. It's not a full blame of ETH. It's also something got to do with the macro. There's still a bit of this uncertainty that we are seeing everywhere. Of course, stocks are performing well, like they always do, thanks to
Right.
Nvidia and Amazon, perhaps. But
Yeah,
we need to get dollar index down.
sure.
Until dollar index keeps wrecking chaos, that's the hard part.
Yeah. Okay. Well, I think that's something that everyone who allocates those classes right now can realize. I hope everyone's enjoying my dance moves. I'm practicing for my recital this weekend. So I want to get a little bit into outside forces. One thing I will comment on when we look at this analysis and the commentary coming from X, it's often so centric on what is happening within our ecosystem, but the outside forces have such a massive influence. And we've been talking on this show for the last couple of months and really going to the beginning of the year about the risk of the Dixie. The Dixie has woken up. It's continued to be strong. It's sitting this morning when I was looking at it, it was back under 106, but it was sitting at about 105.91. JJ, I want to get your take here. What are you thinking is the next couple of steps for the Dixie? I know we started the show talking a little bit about Professor Satoshi was hoping that there would be a magnet to actually bring it down. We were starting to see a topping. You mentioned you're not as confident. Walk us through what you're seeing and what this may look like in the coming weeks and perhaps the rest of the summer.
So basically, ever since we bottomed back in early June, it's just been a series of higher lows. This entire chart, it's just forming a great trend here, right? So even today, it's a pullback from the upper Bollinger Band here on the daily, but it's still at a higher low. So tomorrow we have PCE numbers. If those come out higher than expected, I think you're just going to see this blow off above 106. And that once we get that options expiry behind us too, that could possibly create the setup that the market needs to fall lower, which isn't an ideal scenario, especially ahead of things like the ETH ETF, right? But you get that options expiry. There's no longer that large put wall at 60K. That's kind of been holding price up. And if Dixie strengthens, I think that's when we'll see lower lows on Bitcoin and Ethereum as well, regardless of the ETF narrative, right? Like there's just the liquidity nature of the market is that if the dollar's strong, it's very hard for risk assets to move up in any definitive nature. So what you really need to see is, I think there's a whole lot riding on how these numbers come out tomorrow and ultimately how Dixie closes the month of June and Bitcoin and Ethereum close the month of June as well. It's going to be rather pivotal because if they close at the lows, it's going to be even like every level we lose, that creates more resistance overhead for price to get above. So it's going to be a longer period of consolidation throughout that. And what we're seeing from the Dixie now, like it's great that it's down today, but it's still up massively, right? Everything on here is still extremely bullish. So until we get that message from the market, and there will be time to act, like I don't see a scenario where Dixie just falls to 103, Bitcoin goes directly to all-time highs, ETH goes above 4K. I don't think that happens overnight. There will be warning signs. So you would see Dixie fall below 105.20. You'd see Bitcoin and Ethereum move up slightly, right? Maybe they move up 3 to 5%. And then you see Dixie come up and backtest Bitcoin, Ethereum, backtest the previous range. And it would kind of form that series of lower highs on the Dixie and higher highs on Bitcoin and Ethereum. And as long as Dixie keeps breaking down, you see it move below 104 in the summer months. That's kind of that's the ideal setup. We need it to fall below these lines, preferably below 104.50, and then ultimately below the June lows. And that's when we can consider, the all-time high scenario. The ETH ETF is as bullish as advertised, but until we see those signs, you have to be on the side of caution here. You need to wait for the market to give you those signals that, hey, Dixie has topped out, liquidity conditions are going to improve, and you're free to take risks. Right now is the time to be weary of this, because if it goes below 106, I think it's heading to the October 2023 highs. And at this point, Bitcoin was trading below 30K, Ethereum was around 2K, and the S&P 500 was about 1,500 points lower. So there's a whole lot that could go sideways if Dixie breaks out from here.
JJ, walk me through your thinking here from what could actually be the catalyst to actually bring the dollar down, because we've talked about events, and to me it feels like the dollar continues to be bulletproof, right? We get the jobless numbers, they continue to be revised to unfavorable. We get the GDP numbers, they're revised to unfavorable. We see housing starts, they become unfavorable. The macro data from a US perspective continues to not look great. But then you compare it to the other currencies in the basket of the Dixie. So if you've got the euro, or if you've got the pound, or you've got the yen, they're looking even worse, right? So then you've got that question of how much do those macro events really impact investor sentiment when it comes to the Dixie? And then we've got the other, call it the other swan that's in the room, which is this election coming up in a couple of months. So what does the election, is that the catalyst that could potentially send this Dixie somewhere if these other macro events aren't going to do it?
I don't know. It depends on the way the options market reads these federal funds futures. So as we see, they're still trending near the lows of 2024. So they have, when these go up, this is the market telling you that there's going to be rate cuts by December. So as of now, there's really no hope for it. Like, they're not showing any signs that there's going to be rate cuts by December. So we would need to see some macro data come in that ultimately leads to a spike here. So you'd see these federal funds futures go up, which indicates the market expecting lower rates by the end of the year. And that would lead to a weaker Dixie. And all that, it almost doesn't matter what actually happens. Like, you just want the market's expectations of rate cuts to be higher. So as we saw in January, there was, something like 5 or 6 rate cuts priced in here when this was up around 96.30, and Dixie was all the way sub 100. Didn't matter that we didn't actually get rate cuts. The momentum of that expectation carried Bitcoin through quarter one. It sent risk markets soaring higher, right? So it almost doesn't matter what the Fed does. It's just the way the market interprets this data. So until we get a data point that forces these December federal funds futures up, we're still going to be looking at a strong Dixie. So the market will tell you, once again, like, you'll see these federal funds futures go up. You'll see Dixie start to climb backwards. And those are the kind of the pieces of the puzzle you want to be looking at and putting together to give you some indication that, hey, we're going to be making a run back towards all-time highs from here. But until you see it, you just have to be trending cautious. And again, I study this every day, and there's always a lag period, right? You might not nail the absolute bottom, but you'll have a whole lot more confirmation as you see these moving up and Dixie down in connection with risk going higher that can tell you, hey, this is a good time to take some risks, or even outsized risks, right? You might want to be taking some risks now just in case this is the bottom, but you don't want to be fully allocated in case the bottom falls out below 60K by tomorrow, right? So
right.
The market will tell you, and you don't feel like you have to nail the precise bottom, right? Like, there's going to be so much juice on the bone if this does break above all-time highs. Like, we know historically, Bitcoin, Ethereum, they make their moves in very short periods. So the move from 40K to 72K or whatever it was back in March, that was about 3 weeks time, right? So it happens very rapidly, but there was always, like, Bitcoin started to climb up, right? It went from 38K to 42K to 45K to 50K. And at each of those levels, it started to stabilize as Dixie was kind of retreating backwards. So you had those little signs that you could pick up along the way to say, okay, I think we're going to be entering one of those parabolic periods. And does it really matter if you get in at 45K or 50K when you're looking at an upside move of 20K, right? So that's the way I'm looking at it. Doesn't matter if I get in at 61.8 in full size or 65, 67. If Bitcoin's going to make a move to 82K plus, you're making enough money. So don't overextend yourself trying to nail the absolute bottom only for it to fall lower on you, right? So
Right,
just wait for
right.
those signals, and I think the market will tell you. I think there will be plenty of warning signs in advance that, hey, we're due for an outsized move, and those signs aren't there yet. So until we see them, just trend cautiously.
Okay. So there you have a view right there on the crypto markets as well as the outside forces. The Dixie is just so strong right now. You really need to be cautious. That doesn't mean that there aren't opportunities, and that's where we're going to trend to now. Talk a little bit about what the setup might look like to how to play this ETH ETF. Talk a little bit about whether there are opportunities in Bitcoin. And obviously, I'm going to ask Benjamin what his thoughts are and whether or not there's other opportunities, perhaps further out on the risk curve right now, or if we still need to be waiting until the end of the year. Before they do that, I do want to give a shout out to CoinCall, because I know we're going to be looking at some of the options chain there and definitely be bringing that up. CoinCall has frequently been the sponsor on this show, and they were the sponsor yesterday for the options roundtable. And if you're unfamiliar with them and you're interested in options, there's no better place to get started. You know, we talk about some of these altcoins. They are the premier altcoin options venue. That's where you can go to be doing things not just on the majors like Ethereum and Bitcoin, but also looking at options for things like Filecoin and Solana. So you got a lot more breadth there. And it's just a really nice, elegant interface and competitive fees. And we've highlighted many times with JJ's options videos, and obviously it's on the show every time. If you're interested in checking that out, you can check out the link in the description for me, Marconi, or the XC site to get a account started and go check them out. So there's a link right there in my bio. But with that, I want to move on and talk a little bit about opportunities. As I said, let's start and talk a little bit about Ethereum. You know, is there a play right now from an Ethereum perspective, getting in on some of those options? JJ, you highlight those before. Let's come back, revisit those, look at the options chain, see what someone may feel like a good spicy take right now that they could get into.
So I'd look at it, and I think straddles are a very attractive play here, where you're basically not choosing a direction, but everything we outlined with the ability of Dixie to either make that parabolic breakout or fade towards 104 in July. I think that's providing an opportunity due to implied volatility levels not being that high. They're obviously still a little higher on ETH, but it's not at any crazy levels to where I'm scared of buying straddles here. And I'm looking at this with kind of a 1 week, maybe even lesser, see kind of what happens into the options expiry tonight and ultimately how the monthly closes. But I would look at something like these 3,300 puts expiring on June 12th. So this is kind of your protection to the downside. They're only $80. If Ethereum falls to sub 3,000, DXY breaks out, the ETF is a total failure. You have protection at 3,300, and it's only going to cost you $80. So if it falls to 3,000, these are worth over $300 a piece, right? And that's kind of your downside protection. And then I would look at longer dated calls out of the money in case we do get that explosive move up. I would look at something like these August 30th, anywhere from 3,700 to 4,000. And this is you're paying a bit more here because there's been a lot of rush for calls in ETH lately, but I think the potential is there for it to make that move, especially if Dixie retreats. And again, you're looking at this with kind of a 1 week scenario to see if you start to see those signals that we outlined earlier, see if price really wants to make that move. And these can multiply rather quickly if we see another IV spike in July, as we saw in May, in terms of the ETH IV front term. So I think you would want to buy anywhere from 3,700 to 4,000 calls, depending on your risk profile. Maybe ladder these a bit and just kind of wait and see how the market plays out over the course of the next couple of days. You have your downside protection, you also have the upside, and you're putting a shot clock on it. So you're waiting for some kind of volatility event one way or the other.
Really position for what's going to happen with the ETF. JJ, a specific question, really get into the nuts and bolts here for this. When you're thinking about where to actually position within the month, I noticed you went to August, you didn't go to September, and you weren't in July. How is there a rule of thumb that you're using? Because you talked about that being a straddle. Are you using a rule of thumb for a month separated, or are you looking more at the price structure and even the term structure to figure out how to actually put on that trade?
So I'm looking at it more from the perspective of, okay, if imagine this is a rebound rally and we're going to head lower, right? Then we're going to head much lower, most likely by next week. So I'm looking at puts for the week of July 12th, because if next week is ultra bearish, we fall through the floor at 3,000, I'm covered through July 12th at 3,300. So I would get a nice IV spike here, and I would have a bit of time premium as other people are rushing to buy protection on their ETH. I can sell that insurance to them. These might be worth $300 to $500 in the event that there's a crash. So you get a nice 5x multiplier on those 3,300 calls, and then you still have your upside intact for August. So if we do get that downside move, you see, is it just a Is that going to be a sustained theme throughout the summer, or is it one last final liquidation run? You can kind of look at the structure of the market at that time and decide if you want to keep these calls, but they're still going to have value because there's the time premium associated with it, right? So I'm going out to August for the calls just in case we get a liquidation run in early July, and then the market continues its momentum forward, starts to move towards 4K later in the month of July. So it's kind of my way of expressing perhaps a short-term bearish view, or at least a need for short-term protection against the bearish scenario, while also having upside and the ability to add to these calls if I wanted to, or just cut the position entirely if the market doesn't follow through.
Okay, good clarification on how to think about creating that setup. Let's go to Bitcoin right now. It obviously doesn't have the catalyst coming up, right, with an ETF. Are there opportunities right now for Bitcoin near term? Are you looking for later in the year, or is it still a time to be sitting on the sideline with some fresh powder, ready for when the IV hits the right point? I would say the premiums are very inexpensive.
I think you could run the same play on Bitcoin, and it's even the potential is there for this to even be more lucrative due to implied volatility levels being much lower on Bitcoin than Ethereum, and also realized volatility levels being in the basement as they are. So if you look at the July 12th 60K calls, those are only trading at a little over $1,000 each now. And again, just on this past week when Bitcoin was at 58K, these were more than double. So you have the nice ability there to have that full downside protection for the next couple of weeks in case, options expire. Dixie breaks up tomorrow after PC, the bottom falls out, Bitcoin falls to 50K. These will turn into over $10,000 of profit for you. So I like that. And then again, I also like looking out towards August or September expiries and going for some call upside. And again, you're just holding this for a week or so, seeing how the market plays out as we get through these next couple events of the options expiry and the PCE print tomorrow, see if that causes any volatility in the market. But I'm looking at it from the perspective of is the setup for volatility there into the monthly close and monthly open? Yeah. And implied volatility levels are very low. Realized volatility levels are as low as they've ever been. So that's kind of telling me it's time to be a buyer. So I'd look at anything for August calls between 67 and 70K. And again, if Bitcoin does make a miraculous V-shaped recovery, you have that, you're not FOMOing in, right? You're already in position. You can catch that nice IV spike on the front end and choose if you want to hold these for a little while longer or just sell them for profit when we do get that spike. And in either scenario, I believe if we are to realize volatility, the spike on either end, be it the puts or the calls, it's going to offset your losses from the other end of that trade due to just the nature of it. If price moves in any exaggerated fashion, you got nice coverage in both directions there.
Excellent. I had some other questions, but I'm going to have to reserve that for a different day. But that's a really nice setup that you just laid out from a Bitcoin perspective. If you're interested, you're listening to this and you have more questions about options and thinking about that, JJ has all the training videos on the XC YouTube site. And yesterday's options roundtable, we were talking about the benefits of using options. JJ just walked through a couple of those, really taking advantage of the fact that volatility has been so muted and being able to catch that ride when it moves forward. If you look back at some of our previous episodes, just in the last couple of weeks, we saw some massive moves for Ethereum that just really could have made for an entire quarter or 2 quarters in terms of profit. So it's something to check out. We're obviously huge fans of options. We realize there's a bit of a hurdle, but as people were talking about yesterday, if you make the investment for a while now, it can pay off dividends for the years to come. Something to keep in mind. Benjamin, we're going to wrap it up with you. I want to hear from you. What are you looking at from an opportunity perspective right now? Specific, maybe start off a little bit. Are there things that you're looking at for Ethereum specifically? Are you looking at the Ethereum ecosystem that are maybe beta plays to Ethereum? Or are you actually stepping away from that and looking at something else? Or finally, maybe you're just sitting on the dry powder, allowing all of this to play out before you're actually able to make a trade that you have high conviction in.
More or less waiting on the dry powder.
Okay.
I'm not overly bearish, but I wouldn't be bullish when dollar index is so strong. And another issue I face is when I look at the future, when I look at liquidity.
Oh, Benjamin, did we lose you? Oh, okay. No, you're back. Sorry. Continue on.
Yeah. So I don't think it will change too fast, too soon. We expected a relief after we hit the 58K level. So that's what is happening right now. And there is a over hype enthusiasm that's definitely going on, whether it is due to ETF or, some altcoins, some meme coins popped up. So, it really shows that the market is highly driven by hopium right now. Everybody is hoping there is going to be a crazy bullish summer. I don't call me skeptic, not a problem, but I would rather wait and see where this basically tops off.
So are you then waiting for a Dixie to show? Does it have to, I guess, fall off below 105 or another price point before you start to go risk on? Or are you looking? Are there other signals that would be from the T3 or something else that would give you that risk on sentiment, or the signal that you're ready to go risk on?
So of course, from Dixie perspective is one thing. Secondary, I want to see some really good order book levels, some thickening walls, some T-wapping behavior on the buy side, some strength in both BTC and ETH, or at the very least in ETH, not just in terms of price, because when order books are illiquid, you can have price, jump up faster, but when there is lack of demand, it comes back down as fast as it went up. We saw it in end of May. The entire June was driven by, how ETH kept bleeding and driving everyone down. We could see some situation like that again. And if it is true that next week ETF starts trading and we don't see good inflows, that's going to be even worse. So I do not know what to expect next week once it starts trading, or if it starts trading. If we are seeing hundreds of millions of dollars of inflows, or if we have a day one with 10 million inflow. There's no way to know that right now. And it doesn't seem like market is also, expecting some overperformance. It doesn't seem like that to me based on the books, at least. Sure, the price is up, but this relief was nothing unexpected. So next week could give us a better direction. If there is a really good solid inflow coming, then it can basically say that, okay, so there is actually some demand on ETH ETF compared to the underestimated expectations that I had, then we can see on a pullback to get back into the game and, look at ETH betas. Right now, some ETH betas are performing well, like Lido and so on. But with the SNA ETF filing news, we have to get into that discussion as well, whether it is even possible that they will consider it, or will it be a security. So there's a lot of discussion time now, given a lot of assets are not performing. So that's a good thing.
Yep.
But yeah.
Okay. So
I would still keep some dry powder. Mid of July is when potentially I would expect to see if there is a change in this behavior.
Some confirmation mid-July, obviously looking for the Dixie to break down, but also looking for the volume to give you that signal that people are actually here. There's volume in size, there's demand in size, and you can start deploying some of that powder into assets that are going to get a boost.
Yeah.
Okay. Well, there you have it, folks. You've got two different ways you can be playing this. You can be sitting there with the dry powder, as Benjamin's recommending, as you go into July and the rest of the summer. Again, let's remember, he's the one who said, sell in May and go away. And so far, he appears to be feeling pretty good about that call. But you also got what JJ was talking about. We got the Ethereum ETFs next week, and there is a way in which you can play that, be protected to the downside and the upside, the benefits of options, right? And then obviously Bitcoin, with the IV levels being as low as they are, could be an interesting time to play that. Again, very different products if you're doing spot versus options. And we haven't even talked about perpetuals, but
that's a good thing about options, right? Is you can protect your liquidity. You can risk very little, especially Bitcoin, implied volatility and realized volatility levels is as low as they are. You can take a gamble on both sides here, let the market come to you and see how it plays out while still having that protection to decide, okay, do I actually want to deploy spot or not? You don't have to FOMO if you see a large move because you've already got that protection in either direction. So very important skill to learn.
There you get the PSA from JJ on doing options. But I want to thank both you guys, JJ and Benjamin, for being here, dropping that alpha. For all those who are out there, be safe with your trades, be smart, have some dry powder, be prepared to deploy when the market really turns around in your favor. And we'll be seeing you next week on the next episode of Trading Pit. Ciao, ciao.